In a world obsessed with quick riches and complex financial jargon, one name stands out as a beacon of simplicity and enduring wealth: Warren Buffett. For decades, he has demystified the art of investing, proving that true wealth isn't built on speculation, but on timeless, understandable principles. Many believe Buffett's success is a secret formula, guarded by Wall Street elites. But what if his strategy is surprisingly simple? What if the path to building substantial wealth is accessible to anyone willing to learn and apply a few fundamental truths? In this video, we'll break down Warren Buffett's remarkably simple yet profoundly effective strategy for investing and building wealth. We'll uncover the core pillars that allowed him to become one of the richest men in history, and more importantly, how you can apply these same principles to your own financial journey. Get ready to simplify your approach to money and unlock your wealth-building potential. The first cornerstone of Buffett's strategy is deceptively simple: invest only in what you understand. He famously said, "Never invest in a business you cannot understand." This isn't about being a genius, it's about knowing your limits. Buffett calls this your circle of competence. It's the area of business and industry where your knowledge and experience give you an edge. He doesn't chase every hot new trend or complex technology. If he can't explain how a business makes money to a fifth grader, he won't invest in it. This discipline prevents costly mistakes driven by hype or misunderstanding. For you, this means looking at businesses you interact with daily. Do you understand how your local grocery store makes money? How about the company that makes your favorite soft drink? Start there. Don't feel pressured to invest in cutting-edge tech if you don't grasp its fundamentals. Your greatest advantage lies in what you already know and what you're willing to deeply learn. Buffett's second pillar is about quality and value. He doesn't buy just any company. He seeks out wonderful businesses at fair prices. Notice he doesn't say fair businesses at wonderful prices. Quality comes first. A great company, in Buffett's view, has a durable competitive advantage, what he calls an economic moat. This could be a powerful brand, a unique product, a cost advantage, or high switching costs for customers. These moats protect the business from competitors and allow it to generate consistent profits over time. He looks for businesses that could be run by an idiot, because eventually, one will be. Once a great business is identified, the next step is to buy it at a fair price. Buffett isn't interested in overpaying, even for the best companies. He waits for opportunities, often when the market is pessimistic or irrational, to acquire these gems at a discount. This requires patience and the emotional discipline to act when others are fearful. In a world of instant gratification, Buffett's third pillar is a radical concept: thinking in decades, not quarters. He famously stated, "Our favorite holding period is forever." Buffett doesn't try to predict the market's next move. He understands that daily fluctuations are noise. The real magic happens over long periods, through the power of compound interest. He buys businesses, not stocks, and treats them as if he owns the entire company. This long-term perspective allows him to ride out market downturns and benefit from the steady growth of quality businesses. Patience is not just a virtue, it's a strategy. It means resisting the urge to constantly check stock prices, to react to every news headline, or to jump into the latest fad. It means trusting your analysis of a great business and letting time do the heavy lifting. This principle applies not just to investing, but to building any significant endeavor in life. The fourth pillar is perhaps the most challenging for most people: mastering your emotions. Buffett often says, "Be fearful when others are greedy, and greedy when others are fearful." This is the ultimate contrarian mindset. Buffett views the market as a manic-depressive partner named Mr. Market. Some days Mr. Market is euphoric and offers to buy your shares at inflated prices. Other days, he is depressed and offers to sell you his shares at ridiculously low prices. The key is not to listen to Mr. Market, but to take advantage of his mood swings. When he's depressed, buy. When he's euphoric, sell or hold. This emotional discipline extends far beyond investing. It's about making rational decisions in all areas of your life, even when fear, excitement, or peer pressure try to sway you. It's about having the courage to be an independent thinker, to stick to your principles when everyone else is losing their heads. This is how true resilience and lasting success are forged, often called the eighth wonder of the world. Compound interest is the engine behind much of Buffett's wealth. It's the magic of earning returns on your initial investment, plus the accumulated interest from previous periods. It's not just about money. It's about consistent effort yielding exponential results. Buffett bought his first stock at age 11, yet an astonishing 99% of his wealth was accumulated after his 50th birthday. This isn't a coincidence. It's the direct result of decades of compounding. Every small, consistent effort, whether in investing, learning, or personal development, adds up over time. Read a little every day. Consistently learn a new skill. Nurture your relationships. The returns are exponential. The mistake many make is seeking the big, immediate win, rather than valuing the small, consistent steps. True wealth, in all its forms, is built incrementally. Don't underestimate the power of time and consistency. They are your greatest allies. Start small, stay consistent, and let the magic of compounding work for you. Warren Buffett's strategy isn't complex. It's a testament to the power of fundamental principles applied with discipline and patience. Invest in what you understand, buy great companies at fair prices. Think long-term, master your emotions, and harness the power of compound interest. These aren't just investment rules. They are life rules for building enduring wealth and a purposeful life. If you're ready to apply Buffett's simple yet powerful strategy to your own life, subscribe to the Buffett's Way channel and turn on notifications so you don't miss our next insights. Leave your comment below. Which of Buffett's principles will you apply first? And remember, the best investment you can make is in yourself. Let's delve deeper into how these principles translate into actionable steps for your own financial journey. When Buffett talks about investing in what you understand, he's not just talking about industries, he's talking about the business model itself. Can you explain how the company makes money to a child? If not, it's probably too complex for your circle of competence. This simplicity is a strength, not a weakness. It filters out countless speculative ventures and keeps you focused on what truly matters. A strong, understandable business. Regarding buying great companies at fair prices, remember that fair doesn't mean cheap. It means a price that reflects the company's intrinsic value and future earnings potential, not just its current stock price. Buffett often says, price is what you pay, value is what you get. This distinction is critical. Don't chase hot stocks, chase value. This often means being patient and waiting for market dislocations or temporary setbacks that allow you to acquire quality assets at a discount. It's about being a selective hunter, not a frantic gatherer. The long-term thinking aspect is perhaps the hardest for modern investors. We are bombarded with daily news, quarterly reports, and instant market reactions. Buffett ignores this noise. He focuses on the underlying business performance over years, even decades. This mindset allows him to avoid the emotional roller coaster of short-term trading and benefit from the power of compounding. Think of your investments as planting a tree. You don't dig it up every day to check its roots. You plant it, nurture it, and let it grow. The same applies to your financial garden. Mastering emotions is a continuous battle. The market will always try to tempt you with greed during booms and scare you with fear during busts. Buffett's advice to be fearful when others are greedy and greedy when others are fearful is a profound psychological insight. It requires immense self-awareness and discipline to act contrary to the crowd. This isn't about being stubborn. It's about being rational when others are irrational. It's about having a plan and sticking to it, regardless of the prevailing sentiment. This emotional fortitude is a competitive advantage that very few possess. Finally, the power of compound interest. This isn't just a financial concept, it's a life concept. Every small, consistent effort you make in learning, health, relationships, or skills compounds over time. A little bit of reading every day, a consistent exercise routine, a daily effort to improve a skill. These seemingly small actions accumulate into massive results over years. Don't dismiss the small gains. They are the building blocks of exponential growth. Embrace consistency, and time will become your most powerful ally in building wealth and a fulfilling life.